Hello, everybody. Thanks for coming. Welcome, welcome. I'm Cameron Wilson here, helping your awesome agent to put on this first-time homebuyer seminar. So I'm excited to have you all here. Feel free, keep eating. If you want more food, go back. You won't interrupt us, so don't feel bad if you're standing up in this. Quick layout of the land. If you need to use the bathroom, down that little hallway to the right, there's a bathroom. Otherwise, hang out, have a good time, get some food, get some drinks, and we're here to help you through the process of buying a house. So as we get going, I want to know, why did you guys come today? Because your sister.
Someday.
Because you want to buy a home someday. Got to know the process. Love that. Why else? Don't know what you don't know. That's a good one. What else? By the way, Jordana is writing all of these down so we can make sure we answer all of these, because we're going to run through a lot of stuff, but it might not answer your exact question as we're doing it. So this will make it happen.
Break down the process and see what you really need to get the home. And how to get
See what you
started.
need, see how to get started. I love that.
I'd like to see some numbers as far as like what should I be shooting for, as far as how much, what kind of salary buys what kind of a home, and kind of that
Yeah.
range.
What do you need to earn to get what kind of house? What kind of payment does that look like? Good to know. Numbers. Oh, she answered before that. Anything else? What else do you want us to cover today? Okay, well, you got dinner. We got a whole, a lender. Yes, very important. By the way, thank Aries Mortgage. He's the lender that put this on and bought some dinner today. So your agent in Aries. Yeah, thank you. We'll have him come up and answer tons of stuff. Yeah. Thank you, Jake. Okay. What to look for in a lender? That's very important.
Just to maybe calm down some of the fears that people have about buying a house.
Yeah.
Questions like, what happens if I can't afford this house? You know, how much money do I need to put down?
How much money? Yep.
Various questions.
Yeah. Yeah, buying a house sounds scary, but it's not. I don't know. Maybe it's because I've been living this life for over a decade where I just buy and sell houses all the time with people. It just seems normal. It's like a normal Thursday today. Okay, well, here's a few of the things that we're going to cover as we're going through. As we're doing this, I know a lot of you will have a bunch of questions. We're going to try to keep questions a little bit more to the minimal, because your situation is going to be very unique. So I would suggest that you plan a time to meet with your agent, meet with the lender, and kind of flush out some of these questions that you might have. If you have a generic question, I'd love that. But if you're like, I have this very significant, this specific scenario that I need answered, we're going to try not to do that, because everyone has a different one of those. But so what we're going to cover is we're going to do the pros of owning. Why should you do that? Why own a house? Buying versus waiting. Then the overall process. What does it look like from today to the day you own a home? What's that process like? Why use an agent? And then we're going to jump into the loan and all of the questions and things that you might have there. So we're going to start out with Jordana, if she's ready in the back there, of why own.
Yeah. Okay. Well, let's just flip the board. Cameron can be my scribe now. How about? All right, Jared, will you be the scribe? Okay. What are some reasons that you would own a home? Like own versus rent? Like, yeah. What are reasons to own a home? Equity. There we go. That's a good one.
You can do what you want.
You can do what you want. Yeah. Customizability. Yes. Appreciation. That's great. Investment. Yes. You can never. Wait, say that one time. Yeah, you can't beat inflation. That's a really good one. Yes, obviously I have a lot to move or get through. But yeah, you can stop moving. There's lots of tax benefits to owning a home. Mortgage versus a rent. Stability, I think we said that. Community, you're living more of a community. You can customize. You don't have to check things off with landlords. Do what you want. And then building equity and overall wealth is kind of the biggest thing that I want to focus on today. Obviously I'm biased, but in this field, it is a really, really great way to build wealth and overall a happier life for yourself. So one of the things that we talked about is equity building. Each mortgage payment that you make towards your home, a portion of that goes directly towards the principal, so that when you decide to sell the home 5, 10, 15 years, and 20 years in the future, you will get all of that back essentially, right? And so it is like a forced savings account, which is super awesome. Appreciation, real estate values in Utah specifically tend to increase about 6% each year. So the median home price is $500,000 right now, roughly in Utah. So that is the equivalent of essentially making $30,000 in a year. Yes, it's not directly into your pocket, but you see that again when you sell, when you refinance, all different kinds of things. Okay. Tax benefits, mortgage interest, and property taxes are tax deductible, as well as a lot of your closing costs. So that is also a really good reason. And this is a big one. Stable payments. Rents increase about 3% each year. So you could be renting in a place for 20 years, but on average, they will increase each year. Unless you have a landlord who doesn't increase them, but then 10 years down the road realizes, oh, I should have been increasing these. And then you get increased hundreds of dollars. The mortgage payment is locked in, right? Now, you may be thinking, well, what happens when the interest rates come down? You can refinance, you can get the lower rate, your payment can come down. So you can always refinance for a lower rate. I guess you could always refinance for a higher rate too, but don't. This is just a fun thing to look at. The net worth of homeowners versus renters is 40 times greater. When Cameron got in the business 10 years ago, he was telling me that this number was 32 times greater. So it's just getting a bigger and bigger gap, which is also really interesting to note. Now you're all probably wondering, should you buy now or should you wait? And Courtney's going to talk to us about that. So let's give a round of applause for Courtney. Woohoo!
Okay, thanks, Jordana. Down is forward. All right, how many of you guys who have come tonight feel like you're ready to buy a house? Like raise your hand really high, because that's awesome. So you feel ready to buy a house? How many of you feel like you have a good reason for waiting? Can I hear some of your reasons? It doesn't have to be your actual reason, but a reason people might wait. Income. So your income's, you don't think you'll qualify. Debt, too much debt, or you don't want to take on that much debt. Too much debt. Okay, why else? Interest rates are too high. So a thing I hear a lot is prices are too high. I'm waiting for prices to come down. Another one I hear a lot is I'm saving up, saving for a down payment, saving so I feel more ready. So we're going to talk about a lot of those today. One of the ones I want to focus on is the idea of price and savings. So here you see the home prices appreciation in the United States. This is for the whole United States. How many times do you see that line dipping below the base, which is 0%? How many times do we have negative appreciation in the housing market? This is the last 70 years. 2, 3, 4. So actually, it looks like 4. But this was in May of 23. By the end of 23, this was actually not below zero. So 3 times in the last 70 years has there been a period of negative appreciation. This is the one that was in our lifetime. So we remember that one. And it was even in your lifetime if you were young, right? And we think like, wow, prices really fell. We saw some huge drops in prices. That was historic because in all this 70-year span, we didn't see anything else like that. So we may never see this again in our lifetimes. So what we actually see more often, let's zoom in to Utah. In the last 20 years in Utah, we've had negative appreciation once, and then in this 4-year period. But there's never been a 5-year period of negative appreciation. Utah's average, as Jordana said, is 6.53%. So let's just look at what that means. Where do I point this? There we go. So let's just say a condo is a great entry point for a first-time home buyer or a townhome. If you bought a condo or townhome for $350,000, after year 1, you're looking at this as being your value. By year 5, you have total equity of $130,000. This is with assuming average appreciation in Utah. I don't know very many people who could save $130,000 in the span of 5 years as easily as by just buying a house. Really good way to build savings. If we even take a more conservative approach and we look at 3% appreciation, at the end of 5 years, you still have $55,745 in equity. So what does that do for you? It allows you to have an asset that you can sell in order to get into something that fits your family better in 5 years. So even if you start now with a townhome, in 5 years, you can step up to the next home that suits you better, or you can move on and keep that townhome as an investment, which is a great way to build wealth. So I like to use the analogy, buying a home is like putting your boat in the water. If you're waiting and saving and waiting and hoping that prices will come down or hoping you can get a little more money saved, then you're kind of like this guy at the bottom of the trough. But as the waves rise, if you have your boat in the water, if you have a home, then you rise with the tide. And so you get to capture all of this appreciation instead of being stuck at the bottom of the trough trying to get up to where the boats are. So buy now versus wait, I always think if you can make it work, buying now is better. So all of those questions that we talked about in the beginning, a lot of those can be answered by talking to a lender. We have a great lender here today, Jake, who is not only good at what he does, but also he cares and he's fun to talk to. So he has a lot going for him. But if you can kind of overcome some of those hurdles sooner than later, you're actually going to be way better off. So the process to buying a home is the next thing we're going to cover. And Amy is an awesome agent who's going to take you through step by step so you know exactly what to expect.
Thank you. Thanks, Courtney. All right. I love the numbers and stats she shared. So I am going to go over the process. When you're ready, this is the process we'll go through. Don't feel like you have to memorize this because you have us agents to walk you through step by step. But we're going to go over it because they say it takes 7 times to really understand, to hear something, to really understand it. So first step is you're here. So congrats for learning and getting the education. We're so glad to see so many of you here. So here are the steps, and we are going to take our car to find your home. Here we go. All right, the first step is pre-approval. This is when you will meet with a loan officer. And one of our great loan officers, Jake, will be here and we'll share more about the loan process later. But he's a great person to reach out to for pre-approval. He will ask you questions like, what's your income? What debt do you have? What's your credit score? and he will help come up with a mortgage amount that you will pre-approve for. Here's a tip that I learned when I was just married is find what mortgage payment that would be. And if your rent is like $500 less than that, or whatever it is, save that extra money every month and live like you're living with that mortgage payment. So you can see what that will feel like, to see what you're really comfortable with. That's an amount that you're pre-approved for. Doesn't mean you have to have that amount. You can go with what you're comfortable with. Then you're going to be saving that extra 500 or 1,000 or whatever it is, and you'll have more to put down, or you'll have more for your emergency fund, because there will be some repairs and lawnmowers perhaps and things like that that you'll want to have a fund for. So then we will get a pre-approval letter. That letter will be really helpful to show the seller when we're ready to make an offer that you're pre-approved, that you're serious, that you're a qualified buyer. I've had offers brought into me for my listings. Some have had pre-approval letters and some haven't. Having the pre-approval letter makes it a stronger offer. So make sure you start with that step. Okay, the next one is meet with your agent. This is when we will meet. We can meet here in our office. We can come to your home. We'll kind of go through this process that we're talking about tonight. And we will talk to you about the needs that you're looking for in a home. How many bedrooms? How many bathrooms? Are you looking for a yard? Are you looking for not a yard because you don't want to deal with the yard? We'll set you up on a customized home search. I've got friends here tonight who they're not quite ready to buy a home, but I'm sending them homes when I see homes that fit some of the things they've told me about, so that they can start seeing what the market's like now, so they can just start getting a feel for it. As agents, we search the market daily, and I love having clients that I can think this is a great home for them. I'm going to send this to them. So we're here to help with that. Part of this buyer consultation, you've probably heard about some of the new laws that were changing this summer. And one of those is, in order to go see a home, you have to have a buyer broker agreement signed. And so that's just an agreement showing that we're your agent and we're here to work with you and commit to being your agent, and you're here and you'll commit to using us, and we can sign that then so we can show you homes, which is the next step. This is always the fun step when we get to go out looking for homes, and we help you analyze the different homes we'll look at and remind you the things that you told us at that consultation of what was important to you. As soon as we find the right home, we're here to write up the purchase agreement contract. This is when we will compare prices in the neighborhood to make sure we're getting the right offer in for you. And we can negotiate timeline, and we'll talk to the seller's agent and kind of find out what's important to them, so we can make it a competitive, good offer that yours will be accepted. At least giving it the best chance. I'm not guaranteeing every time it will be accepted. So we'll ask the seller to do a home warranty plan. So you're guaranteed the first year you move in, you've got a warranty, and we'll ask for the seller to pay for that for you. That can give a nice peace of mind that you know if anything goes wrong with the home in the first year, it's going to be covered. The seller will then accept, reject, or counter our offer. And the most common is a counter offer. And that's where we're here to help you negotiate and make it work and be a win-win. All right. Once your offer is accepted, you have 4 days to put your earnest money down. And that's money that will go towards your down payment. And this is called due diligence period. If anything during due diligence period makes you change your mind, you can get that earnest money back. So here's your home. If you realize you don't like the front door being red, no problem. We will tell them we've changed our mind. No problem. Your money gets back to you. And that's usually about 10 to 14 days. That gives us time to get the home inspection ordered so that the inspector can come out and tell us things that you want to be aware of. It gives us time to resolve those issues and move forward. So a home inspection is $300 to $500. So that's a cost that you will be part of this process. All right, the next is the finance and appraisal deadline. So during this time, we'll have the loan officer will order an appraisal. This is a way for them to make sure that the loan amount that the house is worth what we think it is, so that it protects the lender and it protects you. You don't want to put an offer on a home and find out it's actually worth less than what your offer is. So if anything goes wrong with the loan or the appraisal during this time, you can also get your earnest money back. During this time, this is when the lender works through the underwriting process to get your loan approved. And this is an important time where you don't want to be opening credit cards. Don't think about buying a new truck at this time, because that's not going to make the loan go through faster. Jake's feeling pretty good hearing that, right? You don't want that going on? Okay. Yeah. All right. We're getting close to home. Okay. Settlement. Settlement, also known as closing, is when you'll come in and you'll sign the papers. 24 to 48 hours before this is when you do the final walkthrough. As your agent will go through with you and make sure the home looks like it's in the same condition as when you saw it the first time. And this is when you'll bring your ID and your funds for closing, and we'll sign. Things will be funded and recorded, and then the keys are yours, and congrats. You will be a homeowner and ready to get that boat in the water and start having that equity just build and build. You know, it's like part-time job, getting that equity every year. So it's an exciting time. So hopefully that helped go through the process. Again, don't feel like you have to know all the steps. We're here to help you with the deadlines and remind you of all those things and walk you through that.
Before Amy moves on, does anyone have any questions about the process? I know a few of you mentioned the process. Yeah.
I just wanted to ask, like, how much percentage is the earnest money of like the total down payment?
It depends on a lot of factors. Most people end up offering between like 0.5% to 1% as the earnest money. And then that goes as part of your down payment. And Jake's going to talk more about that in the down payment. Yeah.
So yeah, if you're looking at like a $400,000 home, if you had 4,000, that would be a great earnest money deposit.
Sellers would love to see that.
Yeah.
Yep.
If you have 2 or 3, that would be okay too. But a 1% would be make it a strong offer. Good question.
Any other questions about the process? Good. Amy did a good job then.
Thanks. Awesome. All right. Sarah is here and she is an awesome agent I've loved working with, and she's going to talk about how valuable we are as your agent.
Hello, you guys. This is so exciting. Yeah, I will need that. And I'll put this right here. Down. Down is okay. I am here to talk to you all about your agent's value. Okay. So I would like for all of you to rapid fire words or anything you can think of that has to do with value. When you hear the word value, okay, what do you think of? What was that? Trust. Okay, yes. Value. Okay. Whoops, not veil. Value. Okay, trust. What else? Money. Okay. Worth. Okay. Okay. Integrity. Good. Honesty. Okay.
Quality.
Quality. Good one. Okay. Okay. Kindness. Good. Okay. Kindness. Yes. I love all of these words. When I think of value, I think of something that is all of these things and irreplaceable. Like you can't put a number sign on it. So I would like all of you guys, you have a paper, okay, in front of you, and it's just a bunch of jumbled numbers, right? You're like, what is this? So we're going to do an exercise about value, okay? I would like you to look at your papers, and I would like you to start. I'm going to set the timer for 45 seconds, okay? And you are going to circle 1 all the way through the highest number you can get to. So if you find 1, circle 1, and then 2, and then 3, and then 4. And we're going to see how many numbers you can get to in that 45 seconds. Okay, so let me grab my timer. Oh, you got it ready? Okay. Okay, ready, set, go. Twenty seconds, you guys.
Ten more seconds. 5, 4.
3, 2, 1. Okay, pencils, markers down. Okay, raise your hand if you were able to circle more than 10. Oh, impressive. Okay. Raise your hand if you circled more than 15. Okay. What about 20? Okay. Okay. How many could you find? 20. Okay. Okay. What was that? Okay, 23. She's our winner. Hand sanitizer winner right there. Okay. I'm about to teach you something very valuable. Okay. We have another set of papers that are going to be passed around. Okay. And while these are being passed around, I want you to look at these slides. A lot of these words right here were set over here. Okay. Because that is value. So here was the first sheet you guys got, right? Now, what if I taught you there's a trick to finding almost all the numbers on that paper, okay? It's just a system. There's just guidelines and they're just very simple rules, okay? But look at the chart here. Imagine now this paper is in sections. It's a 3x3, right? Okay. Each section represents where each number is, okay? You can see number 1, number 2, number 3 in a snake-like, okay? Once you get, so it goes 1, 2, 3, 4, 5, 6, 7, 8, 9, then it goes back up to the top. Can you see that? Okay, now that I've provided some value and some guidelines, we are now going to give you guys 45 more seconds to, now that you understand where the numbers are in order, going right to left in a snake-like motion, okay? So here's the S shape that it goes in. Okay, so Cameron is going to give us 45 seconds. You're going to start at 1 again, okay? So start at 1, now that you can see it, and go.
10 more seconds. 3, 2, 1, stop.
Okay. Raise your hand if you got at least 40. Okay, 50? 60? Okay. So were the guidelines helpful? Okay. So as you guys are first-time home buyers, this is like uncharted territory for you guys, right? And it's exciting and it's all these emotions. I remember when I was a first-time home buyer and I found the land that we were going to build on, and it just kind of happened, and we weren't even looking in this area, and once we found the land, I was just so giddy to start the process of building and being a first-time home buyer. My daughter's in the back with her husband, and she was raised in this house for her whole life that we found, and I was so excited. It was the best investment and the best choice me and her father ever did, was get into a home and raise our family in that home. And so this is an exciting time for you. And I would like you guys to think about a realtor that you trust tonight. I want you to think about a realtor that you trust, that has value, that can guide you and help you, and then schedule that one-on-one appointment with them to get you started. Or to just ask any questions. And thank you for allowing me to be here with you. And now I'm going to turn the time over to Jake Butler, our mastermind and lender, and he's going to talk numbers and everything else we need to know about home buying.
Thank you. Thank you. Didn't they do such a great job? Keep it going for them. One more round of applause for these ladies. They did a really good job putting this together. As I should get the clicker here. I'll skip past this. You guys should have a business card in front of you with all my information. Here's a few topics that we're going to cover. To be mindful of your time. I know we're trying to get out of here by 6:30. I'm going to probably go pretty quickly through some of this stuff in hopes that we can get through some questions at the end. Does that sound all right, Cameron? Okay. Awesome. So comparing options. What do you think? Should you be encouraged to shop lenders or programs or options? Yeah. Unless you're my client, then don't shop. Just kidding. So yes, absolutely. You should shop. You want to make sure you're getting the best deal. This is a huge investment, right? So anybody that tells you shouldn't, they probably have something to hide, I would say. Just keeping people honest is a huge part of this. With the financial investment that you're going to be taking on, you want to make sure you're getting the best deal. So leading into that, is there a difference in a loan officer or somebody that you talk to about financing? What do you guys think? Has anybody heard of a mortgage broker versus somebody they go to at their bank? Raise the hands. Anybody know what a mortgage broker is? No. Okay, so this is going to help you along with that. Few of the key differences. So I myself actually am a mortgage broker, which is going to be different than a loan officer that you find, let's say, at a bank. But a few of the key differences are that we are independent and it's going to be wholesale. And why that's important to you is we're going to be getting the best rates and a variety of different programs that maybe you wouldn't find at a bank or a different lender. So what that means for you is that you are going to have the best chance at getting a better deal. So some of the, I guess, the pros for a bank or a retail loan officer is that they are going to have everything in-house under one roof. So there could be some advantages to that where if there's a question as your loan's going through the process, the person they need to talk to is going to be under their roof. That isn't to say that a mortgage broker doesn't have access to the same types of things. We just don't have it under the same roof, if that makes sense. So any of the lenders that we're going to work with, they are going to have processors and underwriters and staff that help the loan move through. But we do have access to talk to them in most cases. Any questions on this at the moment and the differences? Pre-qualification versus pre-approval. So you've probably heard the word pre-approval thrown around a bunch so far this evening. This is kind of subjective, but I'm going to give you my opinion on what the differences are between the two. So pre-qualification. This one, in my opinion, is I just had a conversation with you. You told me I make this much, I have this much in the bank account, I work here, and it can give you a rough idea on what your scenario looks like and what you might qualify for. Another key to this one is that we don't typically issue a pre-approval letter that you can go shop with based on a conversation that we had. You can probably understand that, again, with this being a big financial decision, a lot of the numbers, in a lot of cases, $500,000, as we heard earlier. We want to make sure that if you're out making offers on a place like that, you can afford it, right? And the sellers will greatly appreciate that as well, to make sure put their house on the market, spend all this time, have the real estate agent market it for them. They want to make sure that if they accept your offer, you're going to close on the home. Make sense? Pre-approval, it's the exact opposite of that. So we had a conversation, you did a loan application, we went through everything and answered a bunch of questions for you, got all your paperwork in so that we could review the income and make sure everything checks out so that you can go make an offer on that $500,000 home. Everything okay, Jordana? All right, any questions on this one, the differences between the two? Perfect. Again, this one's kind of subjective as well, but me personally, these are my pillars of qualifying somebody. The questions that I ask you when we're first having a consultation or a meeting, we want to ask things about your income and your employment to make sure you've been at your job long enough, or what type of income it is, to make sure that we have enough income to support the payment. And we compare that with your monthly debt obligations. So when we're talking about that, we're not looking at things like your car insurance or your phone bill or things like that. What we care about is what's on your credit report. So it's going to be things like credit cards, student loans, your car payment, things like that. So the stuff that actually reports to your credit is what we're going to be comparing to the income that we can use for you. Third thing is going to be your credit profile and credit score. So what are the things on your credit? Do you have an instance where maybe you had a bankruptcy or a collection account or something like that? And how does it affect you? What goes along with that is obviously a credit score. So helping you figure out what the minimum credit score is for qualifying for any given loan product. And then fourth is your down payment. This doesn't mean you have to have a down payment, but we will kind of walk you through what options there are based on what funds you do have available. Any questions there? Perfect. I must be doing a great job of explaining this. All right, common loan programs. You may or may not have heard of some of these, and looks like there's a fourth bullet point. Did you add that in? Okay. Okay, so common loan programs that you may or may not have heard of. Conventional or conforming is also what it's called. We've got an FHA loan, VA loan, and a USDA rural housing loan. I don't want to go into specifics on each of these because it would take all night. But if we have a specific question at the end, maybe we can ask that, or come talk to me afterwards and we can get into more detail on those.
Said what the acronym stood for, FHA, VA, like what does that even?
So what you need to know about the bottom three basically are their government loan programs. What the acronyms are probably isn't going to help you. I mean, VA, Veterans Association. So, and then USDA is a rural housing loan. I tried to put that in the parentheses there, but good question.
Can you cover that last little bullet point there?
Yeah.
Someone magically added.
I think
It was not me, for the record,
Cameron. Yeah.
but I
so
like it.
total debt to income ratio. So total debt to income ratio means we're comparing your total household debts with the new mortgage payment included versus what your income is. Now this one says up to 50% on that ratio. There's a couple loan programs up here that go higher than that. So this is kind of just a generic statement, but we can go in some cases with VA loans, they don't really have a limit, honestly. So I've approved somebody with a 70% debt ratio with a VA loan. Is that advisable? Probably not, but everybody's scenario is different, right? So, but in general, 50% would be a good number to look at.
If I made $10,000, let's do easy math.
Okay.
I could have $5,000 of debt payments.
Right.
So my car, my house, my student loans, my credit cards, every month,
Correct.
$5,000
Yep.
of debt. Okay.
And if that's comfortable for you, great. If not, we try to find something that is right with the monthly payment on the mortgage and your total debts. It's a good way to put it. Any other questions? Okay. This one is a very common question that I get with first-time home buyers. But I don't have a huge down payment. What then? So there are going to be forms of down payment assistance and or grant programs out there for you. Whether or not each of you qualify for every single one of those, that would require a further discussion within the pre-approval process. But just in general, yes, they're out there. We just got to make sure that you qualify for them and they best fit your scenario. Sound good? Any other questions on these? Yeah.
It's a case-to-case scenario.
Yeah.
Someone that says, in most cases, to, I guess, qualify for a down payment, you need about 3.5%. Does that sound normal?
Sure. Yeah. You can go as low as 3%, depending on the loan program. But yeah, as long as you have at least 3% down, then you can qualify for a program that is outside of these down payment assistance options. It's a good question. Yeah.
Please get your down payment. And it can come from other sources too. It doesn't just have to be, doesn't just have to be in your bank account. You can get it from other sources as well.
Absolutely. Which leads me here. So part of how I can improve my scenario or qualify for more, maybe I do need the down payment like Courtney's pointing out. You can ask for gift funds from a family member to do so. We don't want you going out and getting a loan to get a loan, right? So they don't like you to go to your bank and get a small personal loan for your down payment. They frown upon that. But you can get a gift fund from a family member. I don't call it a loan from a family member because it's supposed to be a gift and you're not paying it back. Make sense? There's something wrong with my eye. Any questions on that? Okay. So let's say I don't qualify for enough, or there's this house that I want that is just out of reach on my own. What are some other creative ways that I can get to that point? So just a few of them here that I thought of. So an ADU is an accessory dwelling unit. So just a space in your home that you can rent out legally. So it'd be like a basement apartment, mother-in-law space, something like that. What makes it legal is that it's going to have its own and separate entrance and its own separate utilities. Basically, that's what's going to qualify for it. So a space that's actually livable, that you don't have to share amenities with the main house. Obviously, you can add a cosigner. This could be anybody, really, anybody that's willing to put their name on the house with you. This isn't going to help necessarily with credit qualifications. Adding a cosigner is more specifically for boosting how much I can qualify for. Yeah.
Definitely, or is there a process there?
It's until you're able to refinance them off and qualify on your own.
Cool.
So definitely would be a good way to describe it until you get to that point where you support the payment on your own. Little side note on that though. So if the cosigner is hesitant on doing so because maybe they want to purchase a house or do something else with their debt ratio, as long as you've made 12 monthly payments on your own out of an account that they're not associated with, it doesn't count against their debt ratio beyond that. So it's still a part of their credit, but they don't have to count it in their debts. Does that make sense? I get that question a lot, actually, when we're talking about cosigners. Any other questions on that specifically? Okay. Other sources of income that aren't as common, but we can use, so Social Security, pension, child support, alimony, things like that. Those can also be used to help you qualify. And then we mentioned gift funds. And then another thing that we can do is get you on a credit improvement game plan if that's something that you need to do. Maybe getting the improved credit score can help you get into a different bracket where you can qualify for a home. Any questions on that? The rest of this slide at all? Okay. And that's it. That's all I got.
Before we
Yeah.
make you leave, what questions do you have about loans?
Is this, oh, this was, you already flipped it. Okay.
Yeah,
Is there a standardized credit bracket or is it a person basis?
Is there a standard
Yeah.
credit bracket or is it case to case?
So there's, if we're talking about just qualifying for loans, depending on your scenario, you can go as low as a 500 credit score. Now that's going to come with some caveats to it, right? But we can approve somebody as low as a 500 credit score. As far as like, once you're qualified for a loan, there are different credit brackets that help you qualify for different interest rate levels. But
Is that standardized somewhere or is it once again a case by case?
it's a little bit of a case to case basis depending on the lender, but I guess a good rule of thumb with that is every 20 points on your credit score can get you in a different interest rate bracket potentially, depending on the loan program. Yeah.
I know that I get this question a lot, and someone here asked it as well. It is, in general, how much salary can get you how much home? I don't think we quite went over that, and I know it varies, but
It's a great question that I'm not prepared to answer. I'll be honest with you.
Everyone should get pre-qualified.
What does Dad think? I know he's a loan officer, right? Are you prepared?
I think that an easy rule of thumb is $30 an hour is around 300,000.
Okay.
And then 40, you just move up with
Okay.
the dollar per hour.
well, and this is where that 50%
Thanks for just.
rule comes in, right? Like about half of your income can go towards debt. So again, you're making 10,000, you have 5,000 towards debt. That's including your new house payment. So add your car, your everything that you have, whatever's left, that can be your mortgage payment. But then
Yeah.
probably talk to a loan officer to get the reverse engineered. What does that payment equal
Right.
for
Right.
how big of a house?
Him and then you.
Nope, not taxes, not insurance, and it's off of your gross income, not your net. So before taxes and everything for your income.
Well, your question was adding taxes and insurance for like the mortgage payment? What do you? Yeah, that would be included in the mortgage payment, yes.
Real quick, what criteria would you hope to see before you recommend a refinance on a loan that you take? I think Jordana
Glad you
has
like
an
that one,
answer.
Jordana. No, case by case, honestly. So, what we would do is take a look at what your current scenario is and figure out what we could get you. Meaning how far does my interest rate drop? What does that do to my payment? What are my goals? Maybe I'm not trying to necessarily drop my interest rate. Maybe I want to take cash out of my home. So it's going to be case by case. So maybe for you, it's trying to drop your interest rate and save whatever it is, let's say $100 a month. Maybe that's huge for you, but for somebody else, that doesn't mean much, right? So I kind of didn't really answer your question directly, but it really just kind of depends on you. Yeah, so anytime you're gonna do a loan, there's gonna be fees and costs to it. Now, there's gonna be ways of not having that come directly out of your pocket. Or maybe you have a lender that's nice enough to cover some of them. But anybody that says you're getting a free refinance, it's not gonna be free.
So what does a zero cost refinance look like? I've heard that thrown
A
around.
zero cost. So again, we can, as lenders, we can cover some things, which is our own lender fees. And so but that's only a portion of what the fees actually are. So you're still gonna have a title company involved. They're a third party, they're gonna have their own fees. When you do a refinance, you're resetting your escrow account, which is where your property taxes and your homeowner's insurance are housed. So we get to recollect for that. The flip side of that is you get those, whatever's in your current escrow account refunded. So it kind of helps offset those. As far as no cost, like a true no cost refinance, it would have to be a situation where the rate still comes down enough, but you maybe take a slightly higher rate than you would have otherwise. And it creates a credit on the back end where we can reapply that to cover some or all of your costs. Does that answer your question? Yeah. Yep.
Not to go back to the current ratio or I guess assets to
It's okay.
debt, but you're talking about 50%. That seems excessively high. Would you recommend something closer to 30 or 40, or what's your general recommendation? Because 50 just seems kind of. a
50
lot.
is high, but I don't know your situation, right? So maybe it's 50% because we can't document all of your income, or maybe you have a spouse that's making income that's not on the loan, or whatever the case may be. But if it's me personally, I probably want to keep it closer to like 30 to 35% if it's my own loan, but case by case.
In regards to having a spouse hypothetically on a loan,
Uh-huh.
quick question. If
this a
one
proposal?
of the no, if one of the parties, I wish it was, just
It's a
kidding.
strange proposal, no.
Just kidding. Okay.
Sorry.
Here's my serious question. If we had if you had two parties related in, signing on this thing,
Right.
and there's two different credit scores, would having a lower credit score involved in that, would that affect the loan at all, or does it go off of the highest credit score?
It's a great question. So if you need both parties on the loan and one of them has the lower credit score, then the credit qualification is based on the lower party. So even if she has an 800 score and yours is 600, we're looking at yours. Will it help? In certain instances, yes, but it's qualifying based on the lower credit score. Yeah. So if you don't need her on the loan, like let's say, or need you on the loan, whoever's got the lower credit score, then maybe we talk about taking that person off of the loan and they can go on the title of the home.
Okay.
Yep. Lots of good questions.
Question.
Can you talk to us about credit building? So like if I don't have a great credit score now, but I know I want to get ready to buy a home, what can I do to build my credit? Improve my
Good
score?
question. Here's my disclaimer. I'm not a credit expert. Okay, that's not my job, but doing this long enough, I can give you some pointers. So the first place I'm going to tell people to look is either getting a credit card if you don't have one already. That's going to be a quick way to do it. Or if you have a credit card and the balances are high, work on paying those down. So some people will tell you below 30% of your credit limit. I like to say below 25% of your credit limit. But as long as you have a credit card and you're building that credit, that's going to be huge. Even loans. So your loan to credit card ratio can actually factor into that as well. Meaning, do I have a loan and a credit card? So keeping the ratio close to 2 to 1 or 1 to 1 is something that I've heard from people who are credit experts. So this, basically the moral of the story there is have accounts that you're building credit with. That's going to be a good place to start. And then let's say if you have bad accounts, It's tough to get those off on your own. Like, let's say you have a collection account, or a late payment on something. Is it impossible to get those removed or deleted? No, it's just a little tougher. And if that's the route or the situation that you're in, I would say, we get you paired up with somebody who does credit repair for a living and go down that path. Does that help, Courtney? Yeah. Any other questions for me? I love them. Keep them coming. Yeah.
How long, like, see people with the same board?
Okay, he's asking
Wait.
about employment history.
Okay.
Oh. Do you want him to say it?
Yeah, say it.
She ran all the way up here.
What are you looking for when you're looking at an employment history? How long should you be with an employer for applying for a mortgage?
It's a great question. So being with a specific employer for a certain period of time doesn't necessarily need to be the case. It's more about your work history. So do I have any significant gaps in my work history? Have I worked at the same place? One thing we don't like to see is that you've changed jobs several times in like the last 12 to 24 months. That can work against you. But as far as being at a specific job for a certain period of time, we don't necessarily always care. I'm not going to say it's 100% of the time that won't work against you. It's more about, let's look at the job history. And once we have a file in, we can have somebody that will make a decision on something like that, look at it, meaning an underwriter. To go along with that, something that comes to my mind is, let's say like a college student who has been a full-time student, just got out, and they've only got maybe a 3-month, 6-month work history. I don't know if that fits your situation, but this is one that comes up a lot. We can actually use the time in school as a full-time student as part of your work history. So, yeah. Did you like that one?
Yeah, say that again. Say that again.
You can use your time spent as a full-time student as part of your work history. That all makes sense. Any questions on that part of it? Okay. Do you want me to get too far into like a business income type of a situation with that question? Anybody a business owner here?
Yes.
Yeah. Okay. So with business income, it can be a little different. We want you to typically have your business open and file taxes for at least 1 year. Okay. Most times they're going to require 2. So be prepared for that. So 2 tax filings. Where it can get tricky on the length of job history is, let's say you have a normal job that you've worked for 2 years, and then you start a business that you've been at for 6 months. The 2-year work history prior to that doesn't necessarily help you, because you switched from a stable W-2 hourly salary type of position to a type of work that is unpredictable. That's even if you're making $10,000 a month and you can show it, the next month you could make nothing, right? As far as a business owner goes. And so if you're switching from W-2 to a business owner, that can get in the way. It might reset your clock as far as how long you need to be at it, but you can go the other direction and have it be okay. So you can be a business owner and then go to being a W-2 employee, and we can use it right away.
You mentioned that some cases you can only have 1 year of tax filings. I've always heard it was 2 years, so I'm just curious what strings you can pull.
Sure. So it might not be a typical loan like we saw up here. So I mentioned like the conventional and the FHA and those types of loans. It would be something like a bank statement loan, which is where we're analyzing your bank statements and the deposits in your business account to help determine a monthly income. So not always going to be the case. In fact, more times than not, if it's only been a year, we may not be able to use it. But I don't like to generalize the whole thing and say you can't do it.
Okay.
Great question. It's like we ran a little
Yeah.
overboard.
I have a story to end it, and then you
Okay.
guys can come ask Jake more questions. So those that need to leave can leave. In 2019, oh yay, Jake. Good job, Jake. Best part. In 2019, my brother-in-law called me and he said, I want to put a plan in place to buy a house. And I said, I love this. He said, what do you think I should do first? I said, let's go get you pre-approved and actually talk about the process. He called, is actually Jake's boss right now, funny enough, but he called him and said, hey, I'm putting a plan in place to buy a house. And the loan officer said, hey, guess what? You could buy a house right now. And then he told me, I want more of a down payment. I said, stop thinking like that. Let's just go shop for a minute. He ended up buying a house in 2019. Do you guys know what happened to home prices in 2020? How about 2021? 2022? So he now owns this house that has $100,000+ of equity because he was just willing to go just start looking if he could do this, if he was making enough income, if he had enough down payment, and he barely was able to squeak in, and he did it just right in the nick of time to get all of this equity. Moral of the story is you should look at your scenario and actually have a professional, right? Talk to your agent, get in touch with the lender right now and figure out where am I to now? Can I move and get going on this? Or do I need to wait a little bit and I'll have a game plan of things I should be working on, whether that's credit, whether that's income or debt reduction, or maybe it's just finding that right house, whatever it is. So I would suggest reach out to your agent. Thank them for inviting you and for feeding you and everything like that, and tell them they did a good job. And then figure out a game plan of where you're going, whether that's in the next month or two or in the next few years. That way you just have something that you're working towards and a goal. So thanks so much for coming. If you have more questions, feel free to stick around and ask.